Are you surprised by the bull case right now, which is that there is a resiliency to the economy, corporations will adapt, and valuations, particularly X the 4 or 5 glory stocks, are really attractive? Do you buy that?
Well, I'm surprised that more people are coming around to my view. You know, I've been accused of being an uber bull in the past myself. Thankfully, it's been the right call. But what I would say is, you know, over the last 4 or 5 months, there has been this real sort of shift as people have become more constructive on the equity market. Think about where we were coming out of Labor Day, when everyone thought the economy was slowing, the world was going to end, the trade war was going to completely disrupt any growth in China, and that would take down like other countries or other regions like Europe. I mean, it was a bearish crew on Wall Street. And it's really evolved. I think we have a lot of FOMO out there right now. I mean, a lot of fear of missing out on the equity market. And so people are participating. Right. But there are a few people who are really convicted on the fundamentals. And here, I think, is where I would distinguish myself and say I've actually been pretty encouraged over the last couple quarters by how well companies have maintained and protected their margins. Right. They have adapted. That's exactly it, Tom.
And what's so important here is Laidler, Bevan, Moore. All of you are talking about earnings not cratering. That seems to be the bear case right now.
Yeah.
What is the evidence you see that we are troughing, as Laidler puts it, or as Bevan says, we just have a resilient earnings picture?
Well, we know that 2019 earnings were tough. The comps against 2018 post the tax cuts and the fiscal stimulus were always going to be difficult. But the one thing I feel very encouraged about, and we can debate this on a policy side, is because we don't have a huge amount of inflationary pressure, because wages aren't eating into margins, because companies are making smart technology investments to maintain their bottom line, I think, you know, the possibility of having a long, sustained, well, even longer than we've had, bull market in equities is quite high. Plus, Tom, you know, you think about this all the time on the macro. It's the cross-asset valuations that also matter. It's not just whether or not a company is trading at 18 times forward earnings relative to its history of 15. It is, what is the alternative in the bond market or in credit? Yeah.
But, Kate, what happens to a lot of these companies, a lot of these earnings, when actually a central bank policy starts to be normalized?
You know, that's going to be a great question. I would expect that multiples would contract a little bit if we were in an environment where central banks were raising policy rates. We don't think that's coming anytime soon. Certainly not a 2020 phenomenon. And we're expecting kind of, you know, 1.75 to 2% growth over the course of 2020 with really modest inflation. And especially going into the U.S. election with some other geopolitical events, that most central banks are going to maintain this level of accommodation. Against that backdrop, and with yields so low, and with valuations even in private markets relatively elevated, I think the equity market deserves the multiples that are being placed on it.